there's high likelihood that question 1 is going to be published. There's high likelihood of that. And this diet you're looking at is the last time ICAN changed syllabus, which is the one we have been using to date. And now there is a new syllabus that will be happening from November 2025. So this was the first question they asked on published that diet. And it was 40 marks. And that question says we should prepare statement of profit or loss and other comprehensive income for the year ended September 30th, 2018. Statement of changes in equity for the year ended September 30th, 2018. Statement of movement in PPE to be included in published financial statements. And statement of financial position as at September 30th, 2018. For 40 marks. I mean, it was after this diet they stopped giving 40 marks to question 1. And they restricted it to just 30 marks. So, which is also going to be applicable this diet and going forward. But yeah. So, published. Of course, they will give you a trial balance, which will always balance. Okay. And I mean, you should be familiar with all the items on this published account, on this trial balance. And of course, you should all know that all the items here you're seeing in trial balance, they have passed through the books of accounts. I mean, these are ledger balances. Then they then give us additional information that will contain adjustments to items in the trial balance, some mistakes they might have made that you have to correct, some new transactions that they have not entered in the books that you would have to enter. Those are items you find in the additional information. And in some cases, end of the year adjustments that you need to adjust the items in the trial balance with. But ultimately, one thing that would always make your account balanced, of course, that's not the aim, really. Whether it balances or not in the exam does not really affect anything. But see, this additional information, you have to ensure that you pass 2 entries for them. Every item, the additional information, you have to pass 2 entries, 2 legs. If you pass 2 legs for everything, of course, your account will balance, but that does not mean you are correct. I mean, so what is important is just do your best and pass 2 entries. Leave out debit this, credit this if you are not very good at that. It's not really necessary. What is important is that you are effecting adjustments to the appropriate accounts and you're updating it as the need arises. Okay, so there are 6 adjustments here. So let's see if we can quickly adjust them very fast. So follow me. So the first one here, so this is May 2021 diet, May 2021 diet. So the first one here, the first additional information says that one of the reputable customers of Alimajiri Nigeria Limited sued the company for 400 million for breach of contract over a cancelled order. Alimajiri Nigeria Limited obtained a legal opinion that there is a 20% chance that Alimajiri will lose this case. Accordingly, it has provided for 80 million included in admin expense in respect of the claim. The unrecoverable legal cost of defending the action was estimated at 20 million, and these have not been provided for as the legal action will not go to court until next year. Okay, so that's the additional information one. So what do we do with this? What do we do with this? Looking back to the first paragraph, seeing that one of our customers sued the company over a cancelled order. And they are saying that we then seek a legal opinion, and the lawyer said there's a 20% chance that we'll lose this case. Okay, on that basis, we then provided for 80 million, which is 20% of the liability of the 400 million included in admin in respect of the claim. That's one transaction. They give us another transaction. They said the unrecoverable legal cost of defending the action is 20 million. And we have not even provided for this because we have not spent it. And we will not spend it until next year because the case will not go to court until next year. Okay. So is there anyone that can tell me what do we do with these figures flying around in this note one? Is there anyone that has looked at it before that can actually quickly tell us what do we do here?
Uh, Hello.
Hello, Dario. Go ahead, please. Say that.
All right. So now this, I guess, this issue is an issue of agents, uh, provision and collective liability and collective assets. I guess for the 18 million that was kept aside, you have to deduct it from the administrative expenses. As I guess, it's a provision, and uh, I'm trying to put my words right. But I guess it's 80 million. You have to do it from administrative expenses, basically.
Okay. So
And then add to our, they said partition there are two ways. Okay, deduct from admin expense, and then you should add to above our bank balance.
okay, thank you, Temitope. Thank you. So is there any other person that can
Can I
try?
say something?
Yes, please, Happiness. Go ahead.
Yes, sir. Okay, this is a case of provision.
Okay.
So the we should disclose it in the note of the account. Should be noted as disclosure. Everything since it has 20 percent. Okay, I think we should disclose it in the note to account. Just disclosure.
Okay. All right.
Okay,
Any other?
say something.
Okay, Belumi.
Yeah, I think what we should make provision for instead to be the legal cost, because that one is probable that there's going to be an outflow. I don't think we should make provision for the courts, for the court this thing, because I mean we learned that if you are going to make provision, it has to be probable that you are going to lose the case. But in this place, it's a 20% chance of losing the case. So that means it's an 80% chance that they may win. So they don't need to they don't need to make provision for the court case. I think we're supposed to reverse this 80 million that was provided. However, for the legal costs, that one it is probably is sure that it's going to happen. So maybe that's what we need to make provision for.
Thank you very much. Okay. And that's the correct answer. Yes. IS 37, provisions. It says provision is a liability of uncertain timing and amount. And before you can make provisions, it must be probable that there will be an outflow of economic resources, right? And when we say it must be probable, there is an agreement that says that that's a 50% chance that there will be an outflow, a 50% chance. Now, this is a 20% chance. So, and this company has gone ahead to make a provision of 80 million already. But IS 37 is saying, no, you cannot make provision for this because it hasn't met the recognition criteria. The 50% chance is not there. So you see, what we have to do is this 80 million, just as Pelumi have said, we need to remove it from our books. We need to, the provision they made, and they also put it in admin expense. We need to remove it from those accounts. However, the unrecoverable legal cost, even though you have not incurred it, even though you are going to incur it until next year, but it is all irrecoverable of defending the action. You have to, since you have engaged a lawyer already, you're already seeking legal opinion. So right from today, you have a liability. There is a liability, and it's probable that there will be an outflow of resources. So we need to then make a provision for this for this 20 million. This 20 million is what we are going to make provision for. And that's all we need to do in this workings one. So workings one now, is talking about provisions. The first is reduce provision with 80 million. And also reduce administrative expenses with the same 80 million. That's for the case. This for the liability on the case. For the legal costs, we need to make provisions for that. So that means we're going to increase admin expense with 20 and also increase provision with 20. You can easily do this in the exam. You will not get it wrong. So this is as simple as I've presented it. So when you're adjusting, just go to your provision, remove 80. Go to your admin, remove 80. You know, I've passed 2 and 3. I didn't bother about debit this, credit that, debit this, credit this. That will now go and make mistakes. I will now get everything wrong. The legal cost that is irrecoverable, unavoidable, I have to make provision for that. I would add it to my admin expense because that's an additional expense for me. And I'll also add it to my provision because I'm making provision for it. That's it. That's that note one. And I'm done with the first one. Anybody wants to say anything before we move to the second one? Okay. It's understood.
Mr. Matthew, please wait.
Okay.
You mentioned something about 50% that is probable. So what
Yes.
if it was 50%? Does that mean we're going to add that 80 million to our admin expenses?
No, it means that we'll do nothing because they have already added it. That means what they did is correct.
Okay. Thank you.
You're welcome. Now, the second one, it says the directors of the company have estimated the provision for income tax for the year ended September 30th, 2018 at 2280 million. The required deferred tax provision at September 30th is 1,200. Okay, so this one is income tax. You find this one in additional information every year, year in, year out. Okay, so the first thing I go to look at is because they have given me 2 figures. Okay, number one, they said the company have estimated provisions for income tax for the year. These 2280, you should know by now that that is the current tax. You will see is at the end of the year, September 30th, 2018. This is the current tax. And they will also give you the deferred tax, which is 1,200. That's the deferred tax. So I'll go to my trial balance and see if I have any figures for current and deferred tax. Looking through my trial balance, I can see that I don't have any figure for current tax, though I do have a figure for deferred tax. So I have a figure for deferred tax here, okay, which is fine. And by now, you should all know that the figures in the trial balance for deferred tax is the opening deferred tax. That's the opening. And the one in the additional information is the closing deferred tax. Okay, so let's quickly treat that and see how it is done. So 2 is income tax. So you see, normally your income tax would comprise of your current tax and your deferred tax. So your current tax is the figure given to you in the additional information, which is 2280, which is 2280. But the deferred tax that goes to your income tax will not be what they give you in the additional information. It's actually the difference between opening and closing. That's what goes to P&L. So let me do a small workings for deferred tax. I will do my opening deferred tax, which is figure given to me in the trial balance, which is the second to the last figure there, which was 1160. Okay, 1160. And the closing deferred tax is the figure given to me, the additional information. From the additional information 2, it was 1200. So that's 1200. The difference between the two, in this case, my closing is higher, so I have an increase in deferred tax. I have an increase in deferred tax. By how much? By 40. So, and this deferred tax is not just any deferred tax, but a deferred tax liability. So my liability increased by 40. That's an additional expense. So it will be an addition to this. Mark you, if this had been a decrease in deferred tax, for example, if the closing deferred tax was, let's say, 1120, if it is lower than the opening, that's a decrease. My deferred tax liability has decreased. You see, this is not going to be an addition in this instance, but rather it's going to be a deduction. To be a deduction, it will net off against the current tax. But in this case, because I'm having an increase in deferred tax, I will add it here. So ultimately, I'll be having 2320. I don't know if I'm correct. So 2320. This is my income tax that I will recognize to P&L. This is what goes to P&L as an income tax expense. However, I told you have to pass through entry. That's one leg. The second leg, you see, this 2280 will go to current tax liability. It's going to go to current tax liability under your current liability as a second leg. However, the deferred tax, what goes to liability is the closing deferred tax, because that's our liability at the end of the year. That's the position of the deferred tax at the end of the year. But deferred tax comes in as a non-current liability. It comes in as a non-current liability. And basically, that is how deferred tax and current tax are actually treated. Okay, so that's that for that. Any comments before I move to the next one? Okay, all clear. Additional information 3. This one says that the redeemable preference shares issued.
Sorry, Mr. Washu. Please, is it the summation of the current tax and deferred tax that goes to current liabilities in the statement of financial position?
No, it's only the current tax
Okay.
that goes to current liability. while the deferred tax will go to non-current liability, the closing deferred tax.
Okay, then it's only the increase that goes to P&L, like the aggregate.
Exactly.
Okay, thank you.
You're welcome. So, additional information 3. This says that the redeemable preference shares were issued on April 1st, 2018 at par. They are redeemable at a large premium, which gives them an effective finance cost of 12% per annum. Okay. I've explained this to you before when I was teaching you preference shares. You know, a lot of you didn't know. When I was teaching you EPS, I was trying to tell you that primarily when you see preference shares, you treat them as a financial liability. Okay? You treat them as a financial liability unless the examiner specifically tells you that that preference shares is irredeemable. That is when you see preference shares as an equity. Now, this preference shares is a financial liability. And it was issued on 1st April 2018, which I can see that is during the year. It was issued during the year. And they said they are redeemable at large premium, and there was an effective interest of finance cost of 12%. So that means here now we have to do that amortization schedule I taught you, because we're given an effective interest rate of 12%, in addition to the nominal interest rate on these preference shares. What's the nominal interest rate on these preference shares from from this trial balance? Anybody?
8%.
Thank you. 8%. That's correct. Absolutely correct. Okay. So now, 2 things we need to do here from when you see something like this in the exam, this note 3. Number 1, you need to get the new value of that preference shares. You need to get how much is now the amortized cost, which you are going to put in your non-current liability. And secondly, you need to identify what goes to P&L. You need to identify what finance cost or preference dividend actually goes to P&L, because when you have a preference shares that is a financial liability, the resulting dividend you pay to those preference shareholders, you take them to P&L as a finance costs. Okay. Additionally, you need to then look at, okay, is there, out of these amounts that is preference dividend, how much was paid? If the, and which of course you will see it in the trial balance. So from how much was paid, you also be able to have a sense of, did they pay everything, or are we still owing any amount? Okay, if we are owing, that interest accrued also will go to current liabilities. So those are the 3 things you have to do for financial liability. And you always find it in your exams. So it might not be the entire 3. They might not give you effective interest rates, but be sure that you should be able to calculate the interest that goes to P&L in whichever of the cases. And you have to be able to compare it with the actual interest that was paid, so that you will know if there is any interest that is still owing. So let's do that, please. So we are talking about an 8% redeemable preference shares. So how much was the opening balance of that irredeemable preference shares? From here, it was 4,000. It was 4,000. I will add my interest payable, which you can also call preference dividend payable, and that would be the effective interest rate. How much was the effective interest rate? That's 12% from what I can see here, 12%. So I will do 12% times the opening, which is 4,000. Now, because these preference shares were issued during the year, so, and this 12% is per annum, so I will need to prorate. Prorate by how many months now? How many month proration are we doing? April, May, June,
That's
July,
6.
August, September.
Six.
So that's multiplied by 6/12. So can you give me the figure, please?
240.
240.
240. Then I will get my interest that is actually due for the year. Interest that is due for the year, which will now be based on the nominal interest rates. That's 8% times 4,000. Also times 6/12. How much is that?
160.
160.
That's 160. So I'll put that in jackets.
Is it not the same 160 we're given in the trial balance?
Yeah, I
Um,
mean, yes. So what's the closing balance? What's the closing balance? 4,000,
408.
48.
4080. Okay, now in all of this now, how much will go to our P&L as finance cost? It's preference dividend.
240.
160.
Thank you very much, Belumi. 40. Please, by now you should know this already. Is the effective interest rate. In this case, when you are given the effective interest rate, is the interest arising from the effective interest rate that goes to P&L. While this amount, this 4080, goes to statement of financial position. Okay. Now, another thing you need to check, but Adiagbo actually mentioned something that this 160, was it the 160 that was mentioned in trial balance? I mean, for her to say that, that shows that this 160 has been fully paid. This 160 is the interest due on this financial liability. And for it to show in the trial balance, it means that it has been fully paid. If the interest and let's see it, yes, preference dividend paid 160. It means it has been fully paid. You see, if this one, instead of 160, if they had given you something like 100 in the trial balance, that means out of the 160, they have only paid 100. That means there's a 60,000 accruals. There's a 60,000 accrual, but the examiner is very nice. So I think I should change this one so that it won't get you confused. Preference dividend payable. Preference dividend due. So that you will not be thinking that they are two different things. Okay. And that's all for this one. Any questions before I move to the next point? Please, guys, this one, I mean, you need to be an expert in doing this. You see it every diet in your additional information. So, note
Well, I have a
4.
question, please.
Please, go ahead, please.
Now, for that 160 because for the preference dividend yield, if it were to be lower, if we were to have a difference from what was paid and what we want to pay, it means, does it mean that we have an arrears under accountability, the difference?
Yeah, that's what it means.
So now in this case, it means you won't have that in accountability at all for this
Exactly.
particular question. Thank you.
Exactly. Exactly. Okay. So the next item says the leasehold property had a remaining life of 20 years as at the beginning of the year, which is October 1st. Considering that the end of the year is September 30th, 2018. So I can easily know that October 1st is the beginning. So we have a leasehold property having a remaining life of 20 years. The answer is the company's policy to revalue its property at each year end. As of September 30th, it was revalued to 8.6 million. Okay, so these guys revalue their assets every year. Okay, so let's deal with this. Let's deal with this leasehold property. Leasehold property. So, I mean, in an additional information like this, when it comes to non-current assets, PP and all, that you just need to, in this case now, there is a revaluation. That means you do like a evaluation surplus. Secondly, you always need to do your depreciation. Okay. So the first thing is I will get the cost of the assets of this leasehold. And how much is it from my trial balance? Can anybody see it?
10,000.
10,000. 10,000.
Yep.
So do we have any accumulated depreciation here?
No.
There's no accumulated depreciation. Why?
Let's check. It should be in the trial balance.
There
Let's check.
should be.
There is.
Account debt.
2,000.
Where's 2,000? 2,000.
Where's 2000?
This
No,
That's
No,
valuation
that's that
reserve.
one is reserved.
that's reserved.
Reserve.
There's no depreciation.
We don't
There's
have
no accumulated depreciation brought forward here for this. Why?
I thought they said they value the
Oh,
property
because they just
every
bought
year.
it.
Yes.
They bought it
No, it
on the
was not
1st of
20,
October.
2017,
They
October.
just bought it. So it
So
hasn't
on
been
the
depreciated at
20
all.
September 2018, just a year.
That's the first year.
That's the first year.
Where
I think we are the one that will determine it. Should we? Wait.
No, but I think there's
did you know?
accumulated depreciation or 4,920.
On leasehold property.
Oh, that one is on plants and equipment.
Okay, wait, they
Yes.
say it's lease of property at
Add the
valuation. No,
remaining
they
line
didn't say it's
of
cost too.
20.
They say it's valuation. Lease of property at valuation. 1st of October.
Okay,
Or maybe the former revaluation has erased all the whole accumulated depreciation.
That's correct. Thank you. So, I mean, you should know by now, we taught you that whenever we revalue an asset, all accumulated depreciation to date will be
Should be
written.
written off.
Yes, and that is why I wouldn't expect to see accumulated depreciation there. If I should see it, I will quickly tell you that this examiner has made a mistake.
Because we have revaluation reserve.
Exactly. Because, I mean, yes, not only that, because they told us that they revalue the asset every year. So, depreciation, accumulated depreciation.
Okay, yes, the revalue every year.
Okay, now let's get the depreciation for the current year.
For
Since
the
we
current
have
year, yeah,
the leasehold property
20
has
years.
a remaining life of 20 years. So how do we get the depreciation for the year? That would be 10,000 divided by what? 20. What would that give us?
500.
500.
Correct.
Okay. So that means our carrying amount is how much? 9,500. And we're told that this guy revalued the asset. When did he revalue this asset? At the end of the
Of the year, that's this September.
So there was a revalued amount of how much? 8,600. Is this then this will result into evaluation surplus or deficit?
Deficit.
That would be the, how much?
Evaluation deficit of how much?
900.
900.
How do we treat this deficit?
We'll go and net it off from the first revaluation reserve that we have.
Thank you very much. So if you go and put, if you
Hey,
go and put
Christy,
the evaluation,
please.
hey, Tiana, don't distract us. We don't have time. If we
Alright.
go and put this evaluation deficits in P&L, will be wrong. Okay, so it has to be in OCI. And the only reason it's going to OCI is because on this same leasehold property, we had a previous revaluation reserve. We had a what? Previous revaluation reserve. As you can see, it's the last item in the trial balance of 2,000. So because of that, this revaluation deficit ordinarily should go to P&L, but because there was a previous revaluation surplus on this same asset, we'll take it to OCI. We'll take it to reserve like that.
Okay.
And that's how this is going to work in this instance. While this 8,600 will be what will show in my statement of financial position for these assets, while this 500 will be what will go to my statement of profit or loss as depreciation. Okay, so you need to be able to do this conveniently now at this point of your exam. Okay, any notes, any comments? Because that's the end of this one. Any comments? Okay, understood. Let's move to the next additional information. That's additional information 5. And this says on October 1st, 2017, which is the beginning of the year, an item of plant and equipment was disposed for 500,000 in cash. The proceeds have been treated as revenue by the company. The plant is still included in the trial balance figure at the cost of 1,600, accumulated depreciation of 800 to the date of disposal. All plant and equipment are depreciated at 20% per annum using reducing balance method. Depreciation and amortization of all non-current assets are charged to cost of sales. Okay, fine, fantastic. So this one is dealing with disposal. Okay, this is good. This is good because I haven't seen something like this before, except those of you that have solved this question before. So how do we deal with this when we sell and all of that? Very straightforward. Few things we need to quickly clean out first. The first thing I'm cleaning out is the fact that from the very first paragraph, they said they sold this asset for 500 million cash. Okay, so this 500 is actually the sales proceeds, right? And this company treated these proceeds, they treated it as revenue by the company. Okay, so this is wrong. This should not be treated as revenue. It is not a revenue item. So I think let's quickly resolve that first. So on this plant and equipment, I mean, and keep your adjustment like a statement, keep it simple, just understand the core principle and keep it simple. What you need to do is very straightforward. What I'm doing is I want to remove the sales proceeds from where?
Revenue.
From revenue. And which is 500. Which is 500. So if you wish, you can recalculate your revenue. So my revenue as per my trial balance is how much?
60,000.
60,000.
60,000 as per my trial balance. So the sales proceeds from plants is how much?
500.
500.
So the balance of my revenue should be what?
59,000.
59,500.
So I've corrected my revenue. That one is very simple. Then the second one is that they said, okay, this asset they have sold. This asset we sold, if you look at it, the second sentence, they said the plant is still included in the company's trial balance. Okay, why should it? So we need to remove it from there since they have sold it, both the cost and accumulated depreciation. Okay, so, and they also told us that all plant and equipment are depreciated at 20% per annum using reducing balance method. Okay, so let's quickly do that. So let's do those movements. So for this plant, what's the cost of this entire plant?
16. Oh,
No,
okay, as per travel.
as per trial balance,
15,320.
15,320. 15,320. So there was a disposal of how much?
16.
1,600. Abi?
Yeah.
Yes.
as per trial balance, what's my accumulated depreciation as per trial balance?
4920.
4920.
Yeah. So I'm trying to mute Tiana. She's disturbing our house. Okay, Jamie, what did you call it?
4920.
4920. Okay. That's accumulated depreciation go forward. 4920. And there was disposal, Abi.
Yes.
How much? How much?
800.
800. 800. So what's the difference?
4120.
4120. Okay. So help me do this minus this minus this.
Nine six.
Sorry.
9600.
Again?
9600.
9,600. Now let's do our depreciation for the year,
160.
which they told us is 25
20%.
using balance. Is it 20% or 25?
20%.
It's 20%, yeah. 20% reducing balance.
1920.
How did you get it? You did 20% times what?
I see.
96.
Thank you. You know that if the examiner had told you that it's 20% on a straight line basis, what would you have done?
It would have been just on
Would have been
the
2,000.
no, it would have been just on the 15
Or
320
because
minus
Because
16,
Should have been on it.
which is the net cost.
Exactly. It should have been 20% on 1532 minus 16. Since they have sold this one. Okay. But the two does is on reducing balance. So it's 20% off the opening carrying amount. Okay, good.
Oh, wow.
Okay, so please, I have a question.
Okay.
So, because the first thing that came to mind when I saw when I first saw the first said the adjustment was that you get the carrying value of the order of the property and plant, which is supposed to do maybe the 15,320 minus the 4920. And then when you have the carrying value, then you now net off the carrying value of what was disposed before you then do the depreciation. That was, I don't know, can you?
Well, you can do it like that, but get used to this because this is what we call fixed asset schedule. I'm just giving you a template for a fixed asset schedule. So which is why the examiner was even asking you to do that.
Oh,
You
okay.
have to get used to something like this.
But then if they didn't give us the cost to start with, is what we would have used carrying amount.
Exactly. If they didn't give you cost, you will have used carrying amount.
Okay, thank you.
Yeah. But if you have done that also, you will have still gotten the same thing and you will have still gotten your mark. You will have still gotten your mark fully. Just do the carrying amount, then come and deduct it from here. That's also fine. Okay,
Okay,
but
thank you.
get used to this one if you can.
Hello,
Okay.
Mr. Wasisa.
Yes.
the question.
This 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 thing for this access, I did not understand it. Oh.
Which one? Which one?
This one we just did now.
The one we just did now.
Yes, yes.
Oh, okay. Okay. They sold a plant. They sold a plant and they went to put the sales proceeds in revenue. I mean, the first thing we need to think about is that when you sell a plant, it should not go to revenue because That's not your core line of business. It's a plant that you are using to manufacture your goods and services that you eventually sell. So the proceeds should not go to revenue. That's why we first of all remove this 500 from revenue, which we showed here.
I
Having
get
done
that
the
one.
option, we then did a schedule. I mean, the next thing that comes to mind always is to always do a schedule like this for PPE, similar to what we did here too. If you understand this, you should definitely understand this. So we went to trial balance to pick the cost of the assets. They told us that the asset disposed, the cost was 116. We removed it. Then we also went to pick the accumulated depreciation of this asset. We removed the portion of it that has been disposed. So that means our accumulated depreciation is left with this 4120. So and we deducted 15,320 minus 16 minus this to get our opening carrying amount. And we did the depreciation charge for the year, which the examiner told us that is 20% reducing balance, which is going to be 20% on the opening carrying amount, which gave us 1,920. Okay, so this is something you will always do in the exam because you always find it there. Just that it's not every time you find disposal, but I mean, you always have to do cost minus accumulated depreciation minus depreciation for the year every time. And you must always try to ensure that you compute this depreciation for the year correctly. They could either tell you is on straight line or is on reducing balance. Okay. Now, another person is raising up his hand. Can you go ahead with your question, please? Okay, so please, can you give me this carrying amount quickly?
7,680.
Sir,
680.
7,680.
sir,
Okay,
sorry.
yeah, Aisha.
Yes, in respect to what Pelumi was saying concerning the fact that, like, let's assume that they didn't give us the cost of the assets, how are we going to go on about it and then walk back and then get our depreciation and carrying amount? I didn't get it.
If no, she's talking about not this cost. She was talking about the cost of the asset disposed.
Oh,
If
okay.
they giving us the cost and they just give us the carrying amount straight on.
Oh,
So we just come and remove it directly from the cost. And
okay. All right, sir.
yeah. Okay. Now, there's one more thing that most of you might likely forget in the exam that you still need to do when an asset is disposed. And what is that?
Gain or loss on disposal.
Thank you. Profit or loss on disposal. So on this asset, what's the sales proceeds?
500.
What's the carrying amount?
800. Or loss.
Which is 16 minus what? 800.
800.
So when you compare the two, what do you have?
A loss of 3 million. 300. 300. A loss of 300.
300. Where would this one go?
Profit and loss.
Yeah, and you can put it in cost of sales. The examiner has told us, and you can put it in admin if you want to, depending. Let's see if they told us where we'll put it. We're not told. I mean, we're told that all depreciation should go to cost of sales. So, I mean, it's just safe. I would like to put it in admin. Let me drop it in admin. While this depreciation for the year, put it is cost of sales. While this one, this 730, go to my statement of financial position.
Position.
What again?
This one. This one. This one.
This one, cost of sales.
Sir?
Yes, Jamie.
Okay, like this 300 that we put in admin, what of a situation whereby somebody make it as a standalone item in the P&L? Loss on sales.
Well, that's fine, but it's not a best practice, but it's okay. They would give you a mark.
Maybe because of exam tension or something. Just put it as a standalone item.
You're fine. You're just so fine. You're
Okay.
correct. Yes. You're also correct. Okay. We are done with this additional information. Additional information 6, which is the last one. It says, in addition to capitalized development expenditure of 4 million, further research and development costs were incurred on a new project, which commenced on October 1st, 2017. The research stage of the new project lasted until December and incurred 280 million. From that day, the project incurred development cost of 160 million per month. On April 1st, 2018, the directors became confident that the project would be successful and yield a profit well in excess of its cost. The project is still in development as at September 30th, 2018. Capitalized development expenditure is amortized at 20% per annum using straight line method. All expense, research, and development expenditure is charged to cost of sales. Interesting. Interesting. Okay. Can anyone tell me what we'll do here?
Okay, let me try. So,
Mm.
I can't remember the topic, but I remember I taught us in class that you can only capitalize research costs on the dates that directors approve. So all the ones that, so we're only going to capitalize the cost incurred from the 1st of April when the directors approved the projects. And every other cost incurred before then will be expensed.
Thank you very much. You're my best girl ever.
Thank you.
And of course, all the figures are here. So if you look at this capitalized development expenditure from the trial balance, it was 4,000. And it has always been there as a capitalized item. And the next item there was the accumulated amortization on that 4,000. But now they are saying that there is an additional cost, which is in this trial balance. I don't know if you can see research and development cost of 1,720. Have you seen it?
Yeah.
Yes.
Okay. So all those long stories, all they are breaking down is this 1,720. So it's just guiding us on, are we capitalizing this 1,720 or are we expensing it? That's the entire story, really. And from what Pelumi has said, I mean, very straight to the point. I taught you in class that you can only capitalize development costs from the point where either there is a board approval or there is a regulatory approval. I mean, depending on the scenario printed for you, but those are the guiding lights for you in the exam. And from here, they told us that from 1st of April was when the directors were confident that they will start making money. And looking at it, it means any cost prior to that date will be expensed. So that means that let me call this note 6, research and development. So that means the research and development cost of 480. Where is it again? They said they commenced it on 1st of October, and the research of this new project lasted until December, and they incurred 280 million. So from October to December, they incurred 280 million. Are you following? Please follow through. So that means the research portion, the research that we're going to expense is from October to December 2017, they incurred 280. Okay. Now, they now also said after that, they said from that date, the project incurred development cost of 160 million per month. Okay. So that's for how many months?
For 3 months.
Thank you very much. For 3 months, January, February, March. Okay. So because from 1st of April now is another one entirely. Is another thing that's happening. So
Now, 3 multiplied by 160 million.
yeah, so January to March 2018. So 160 times 3. That's how much?
480.
480. So what's the total here?
760.
160.
Okay. So 760. Now, the one from April to the year end, September 2018. That's how many months?
September. 6 months.
6 months. April, May, June, July, August, September. So that's how much?
960.
960. So this will be what?
Capitalized.
Can you add this 960 plus this 160 for me?
170.
Yeah, it gave us the 172.
Exactly.
172. That is in the trial
Exactly.
balance.
Exactly. That is 1720 in the trial balance. That's what they are just breaking down. So that means this 1720, 760 will go to P&L, 960 will be capitalized.
Mm-hmm.
So now, having sorted that out, then let me go to working 7. Now let's deal with the capitalized development costs. So how much was the cost?
4,000.
Abi? And there was
4,000.
an addition of how much?
4,000.
960.
Of 960. Taking 4 now.
So how much was our accumulated depreciation?
Okay.
4920.
No.
Oh, wow.
No, the development expenditure are come amortized. 1, 2.
1, 2.
1, 2.
So 1, 2. What's the depreciation for the year?
Development. Oh, wow.
Depreciation for the year.
Okay.
20% per annum using straight line.
Yeah.
Abi?
992.
Mm-hmm.
So that's 20% multiplied by what?
4960.
1960.
4960. What do you have?
990.
992.
No. Yeah, you're not asking me.
But
When
you put 4,000.
It's
exactly,
not
me, I put 4,000. You said 4960. It's not 4960. It should be 4,000.
Oh, I thought the new cost has
Yes.
increased.
Yes. But we cannot depreciate it yet. The reason is this. He told us that where is it? They said, if you look at this last sentence here, he said the project is still in development as at year end, as at September. So it means that this development costs that we just capitalized is not ready. It is still in development. And
Oh,
IAS 16 and IAS 38, before you can commence amortization on any item, it must be available for use.
oh,
This one is not available for use. And that's the reason why you cannot amortize it. So we need to change this to amortization since it's an intangible asset. I hope you guys are following.
yeah.
So what's the carrying amount?
2960.
960.
2960. Okay. Now, this is the first thing you need to quickly sort out in the exam. Now, when you have sorted all of these out, then there are some items you need to put together just so that when you're preparing your statement, it's easy for you to pick. Okay. And the very first of that would be my cost of sales, because they have said add this one to cost of sales, add that to cost of sales. So as per my trial balance, what's my cost of sales?
4,800.
4,800.
800.
4,800. Please, if you are not calling figures, just mute, because there's some noise on the background. Now, our depreciation, so my first depreciation year was on leasehold, and it was 500. After leasehold, we had plant and equipment, and it was 1,920. Then we have capitalized development cost, and it was 800. What again? Okay, that's all. Okay, and if you look at the last paragraph here, the last sentence here, they said all expense research and development cost is charged to cost of
Mistakes.
so research and development costs. How much was it?
760.
Okay, so how much is the total now?
44,780.
44,780. Okay. Number 9.
Admin expenses.
As per trial balance, what's my admin?
4,440.
4,440. We had loss on disposal of assets.
It was 300.
We had 300. Any other item that should sit in admin?
The legal cost.
You need to put the
Yeah,
legal cost and remove the
the
provision.
legal costs. How much was the legal cost?
20 million.
What about um the liability on the case? That was how much?
80 million.
That would be
That
done.
was 80.
Yeah, that we need to remove that. Any other one? Okay, let's go to our trial balance. If there is any other item we can aggregate in admin. Can't see any other one here. Okay, so let us sum it together. You sum it, what do you have?
4,640.
4,640.
640.
Okay. So let's go to my finance costs.
Wait, do you
Sorry,
want to check
it's
again? I think it's
4,680.
4,680. Admin expense, 4,680.
Okay, thank you. 4,680.
It's 442.
Okay. So as per trial balance, I have an interest on borrowings in the trial balance. Abi? There was an interest on borrowings in the trial balance. I saw it somewhere. Yes. Interest on bank borrowings. Have you seen it?
Yes, it was 40.
It was 40. And there was a preference dividend payable from our workings 3. Yeah. So how much is going to P&L?
Payable 240.
240. Any other item to finance costs? I can't remember any other item. So we have how much? 280. Any other workings here? These provisions, let's see what we have in the there's a trade payables and provisions here. Trade payables and provision, and it was 4,760. So let me update it so that my life is easy. Trade payables and provisions. As per trial balance, how much is it? I got 4,760. Abi?
Yes.
Okay. The recognized provision was how much? Then provision for
Legal liabilities, legal costs.
costs was 20. Okay. So how much in total?
Excuse me, sir. Sorry, sir.
Is this correct? First, is this correct?
It's 47.
47.
4,700.
Yes, please.
Excuse me, sir. I have a question, sir.
Yes, go ahead, Amy.
Please, where are we adding the provision for legal costs to trade payable and to the admin expense? Where are they adding it to the two items?
Oh, okay. Maybe you just came into class much later. We already did the workings from 1 year for the legal costs. We said we should increase admin and also increase provision because this legal cost is an irrecoverable cost.
Okay.
Is an unavoidable cost. Okay. So that's why we're doing that.
Okay, thank you.
Okay. So with this one, all you just need to do is just copy and paste. Is as good as you're done. So any questions? Any questions?
We are adjusted for the revenue.
Yes, we have adjusted for the revenue.
Okay.
Okay, so should I go ahead and prepare the statements or we should go to another question?
I think we should go to another question. I mean,
No,
I
let's
have a
finish it.
question.
okay, let's
Please,
prepare it.
please, sir, let's prepare the statement.
Okay.
I have a question.
Okay, go ahead, please.
Now, in a case where we have a valuation deficit, even having, let's say now our listed property, the valuation reserve was 2,000. And in the case where we end up having a deficit of about 2,1, how do we post the 100? So where do we post the 100 to, please?
Mm.
Can somebody answer that?
Sorry, did you say that if
I didn't
if the deficit was higher than the reservation,
Yeah, exactly.
it will go
The
to POL?
difference. Under what line item?
I can't hear you.
I think under what line item? Will it just be a line item itself, the statement of profit or loss, or it needs to add it to cost of sales or admin or whatever line item?
I'm not very sure.
Okay. So again, like you have asked, thank you, Pelumi. So if the deficit was more than the reserve, just like we had here, this one. Let's say, in this question, and the reserve was 2,000 and the deficit was 900. So we could easily put the deficit in OCI. But let's say this one happened to be, let's say 29. Let's say 29. And our reserve was 2,000 as it is.
The
It,
balance.
it means that only 2,000 will go to OCI. Okay. While the excess of 900 will go to POL. Is that clear, Chopper?
No,
Yeah, I
not
think what is
sure.
asking is, do we leave it as a line item or do we put it inside maybe admin cost or cost of sales?
So
That's
just put it as part of your admin. Since you already showed the workings, just put it in.
okay.
And just like
Thank you.
you have said the other time, because of exam tension and all of that, even if you don't aggregate them, you put them separately, you are fine. You are so fine. You are okay. The guy is going to give you your mark. That's why all these workings are important. So if you can do all of these, your workings, preparing those statements is going to be a walkover for you. Okay, so this company is what's the name again?
Imagine.
Almajiri.
Wait, Mr. Wasiu, under the lease property for revalid amounts, that 86, how did we come about it?
The 86.
Yes.
So they give us an equation.
Oh, okay.
It was an equation. That was note 4. They give us the revalued amount.
Okay, thank you.
Yep. Statement of profit or loss and other comprehensive income for the year ended 30th September 2000 and what?
18.
18. So what are revenue from working? Is it working 2 or so? Working is 5. We already updated our revenue to how much? 59.5. Abi? Then my cost of sales from workings 8. I already got my cost of sales at 44.70 from workings 8. So what's my gross profit? What's my gross profit?
A minute, sir. 14,720.
14,720.
14,720. So what's my distribution cost? This is from the trial balance. What is my distribution? 2,900, okay. 2,900. What's my administrative expenses?
We have note for it.
Okay, that's note what? Note 9.
Note 9.
468.
Note 9, yes.
680. Now I can
Interest.
before you deduct your finance costs, you get your profit before interest and tax. And how much is that?
7140.
7140. Abi?
Yes, yes.
168.
And I will get my finance costs, which is Workings what? Workings 10.
Wait.
Which is 280. We don't have any finance income in this question, I guess. So we have profit before tax. How much would that give us?
6860.
6 what?
6,860. 860. Yeah.
Okay, thank you. Then my
Income tax.
income tax, Workings what now?
Which one is
I
that?
think it's
Income
working 2.
Workings 2.
Yeah, income
Minus.
tax.
So as there's an interest on borrowing.
We've adjusted it now.
We have adjusted it. Look at it in our finance costs.
Okay, stand.
Which is why it's always to I've already summed it together.
Okay.
Exactly. So you must always find a way to aggregate everything together so that you won't be scattered and be looking for it individually. Okay, I will attend to that person that can't do any adjustments. Profit for the year. So how much is it?
4,540.
4,000?
540.
940.
540, sir, not 940.
Okay, 540.
4,540.
So other comprehensive income. There was a
Is
revaluation of how much?
900.
900. So my total comprehensive income. So how much is my total comprehensive?
3,640.
3,640. Okay. So the next one is my statement of changes in equity.
So please, I have a question. I need a question on something. So, sorry.
Okay. Yes, please, you can.
Now, for all those requirements of estimate of equity, comprehensive income, do we have to pull up the name of the company, so whatever?
Yes,
Do you always
please.
have to put the name?
Yes, very important. Very important. Okay. Let's see what goes to equity. My share capital and reserves. So I can see my ordinary
Please, I
share.
have a question.
Please go ahead.
Yeah, in the when you were taking us this presentation, IS1, there was a part where you mentioned other income in the format. That's
Okay.
income from any other thing unrelated to the company's core business. If we
That's
had
correct.
other income, would it be before we get, are we going to include it before the profit before interest and tax?
Okay, so yes. So usually other income can come after your gross profit. Okay, yeah.
Okay.
After your gross profit, you can just put your other income here. Sure you get.
Okay, all right. Thank you, sir.
You're welcome. Okay. So I'm trying to see which items go to my statement of changes in equity. And from what I'm seeing here, I can only see ordinary shares and also retained earnings and revaluation reserve. Those are the three items that will go there. So good for us. Good for us. So we have share capital. We have retained earnings.
Valuation reserve.
Evaluation reserve. So,
Balance brought forward.
okay. So, balance brought forward. How much is my share capital?
10 million.
How much is my
10,000.
earnings? How much am I
Finish.
getting?
49.
49. How much is my evaluation reserve?
2,000.
2,000.
How much is the total?
16,900.
Okay. We didn't have any issue of shares, but I know we had we have
Profit for the year.
Dividend paid. We have dividend paid too.
no, we don't have dividend. We had a
We have
pref
Dividend
dividend.
paid was on preference shares, which was treated as a liability. So it's
Thank
not
you.
going
It's
to
not
affect.
your capital.
Thank you, Pelumi. So my revaluation deficit
Deficit.
we net
na-
it off.
900.
so so the balance carried forward.
10,000. 10,000.
How much is this?
0, 4, 4, 9,
No,
9, 4, 4,
it's 9,440.
9, 4, 4, 0,
Okay. So how much is the total?
1, 9, 19, 4, 4.
Loss.
No, 20,
10,540.
2,440.
540.
540. 20,540. Who is that?
I think.
That was it.
Okay.
I'm sorry.
20,540. So, okay. What did they ask us to do again?
Movement of property.
movement in property, plants, and equipment.
Okay. So, what are the property, plant, and equipment we have? Leasehold property, Abi?
Yeah.
We have plant and what?
Plant and
Machinery.
Is that all?
Yeah, that's just the two assets.
How about the capitalized
development.
cost?
And Antainke. Meet everybody, I beg.
What about the capitalized development cost?
In fact, but the statements, the questions say statement of
Property,
movement in PPE.
property, plant, and equipment.
That one is an intangible asset, so it doesn't come
Yes,
here.
it's part of a non-cash item. I've been non-current non-current asset, I mean.
So it should go to it is an intangible asset, Abi?
Yes.
Okay, good. Good. Okay, good. So let's go. What's the cost of my leasehold property? 10,000. What's the cost of my plant and machinery?
Cost of plant and machinery.
That's 15,320, Abi?
Yes.
The addition is how much?
25.
320.
Okay. Do you have any additions for leasehold and And plants? No, there were no additions.
What of plant and machinery?
There were no additions, but there were disposal on
Yes.
plants and machinery.
You're writing better than writing. This is what you are the kind of person that will tell my writings.
There was no addition, but we have disposal on plants and machinery of 1/6 of 1/6. What again?
So,
Yes, tell me.
no, that looks like 4, and then we'll do the depreciation part.
No, we'll do the depreciation separately.
Yes.
Yeah. So, and don't let us forget
Oh, revaluation.
revaluation. Yeah.
I didn't know I've moved myself and I was shouting.
Okay. Let's do our revaluation deficits. Abi?
Yes, 900 on this property.
Revaluation deficits 900. Okay. So what's the balance carry forward here? This is how much?
900.
How about this one?
I bracket the revaluation deficit.
Valuation deficit, let's put it in jacket, sir. Okay.
Oh,
Oh,
900.
okay. So this is how much?
13,720.
13,720.
That's the total.
22,820.
22,
820.
820.
820. Accumulated depreciation. What's the balance go forward for accumulated depreciation?
4,000.
Nothing on this.
Double check.
4,920.
That's for plant and machine.
That's for plants and machinery.
4,000 was for plant. Can we
No,
confirm
there is
this?
nothing on this.
Leasehold is 0. Nil, yeah.
Okay. So what's the charge for the year? What's the depreciation on leasehold? Depreciation
500.
500. What about plants?
Plant is 1920.
1,920.
Okay. 500. 120. What's the addition?
1,000 for 2,000.
No, 2,420.
420. 2,420.
Okay. How about disposal?
16. Okay.
Disposal of
800.
plants is 800 for the year.
Okay.
800.
For the year.
So what's the balance carried forward? How much is this? 8,600. Abi?
Yes.
How much is this? So this,
19,760.
sorry, please. Ordinarily, this is how we do it. We put 500 here. So let
The
me
total will now compare.
let me
Yes.
do 4,920 plus 1,920 minus 800.
60,000.
60 like this.
60/40.
And this one,
6,540.
500.
So carrying allowance. Mute yourself. Mute yourself. You're disturbing our class. So the balance brought forward is this minus this. The balance carried forward is 91 minus 500. And I guess this is 86. What is 15,320 minus 4,920?
15,320.
Minus 4,920.
10,400.
10,400.
Okay. Well, what is 13,720 minus 6,040?
768.
7,680. Okay. So this should be 2,400. So how much is this?
86 plus 7,680. 16,280.
Okay. So statement of financial position. As at year end. So the first one is my property, plants, and what? Equipment. How much
Sorry,
is it?
Stawasi. I don't get this 10,010 for that you used.
That's the opening balance of our carrying amount, which is this opening minus this opening minus this opening. While the carried forward is the closing minus the closing minus the closing accumulated depreciation. So this is how we do fixed asset schedule. That's what the examiner was requesting. That answer your question?
Yes, thank you.
Okay. So your PPE, just come and pick this one here. I've made it easy for you. Then my capitalized development costs from workings what now? Yeah, working 7. Working 7, it was 2,960, yeah. So that's all. So how much did that give us?
0, 4, 2.
19,240.
So what about leasehold property?
We already added. It's here
You
already.
combine it in our movement of
They are
PP.
part of movement of.
It's part of the total.
Okay.
Okay, let's go to our inventories and receivables. My inventory was 4,000. My receivable is 8,620. So 4,000, 8,620. Okay, let me check if I have any other items of current assets. Okay, but the bank was on the credit here.
Model.
That means it's an overdraft.
An
So
overdraft,
yeah,
yeah.
So those are the only items I have. Oh, there was dividend paid on ordinary shares here that we omitted.
Ah, la, la.
Oh, wow. Oh, wow.
That's an ordinary share. That's on our fuck sheet.
Yeah.
So I have to go back to our statement of changes in equity.
I was relying on you, Adiagbo. You disappointed me. So this will change to how much now? 1,200. That is 8,240.
8,240.
So what would this become?
19,340.
340.
Yes, please.
Okay. So I was trying to find any other items that goes to current asset, but I can't find anyone. So let's just go and close up. Let's close up. Let's close up. So what's the addition of these two now?
0 to 6.
1 to 620.
20 is 20.
Okay. So what's my total assets?
0, 6.
31860.
30.
1.
860.
860, yes.
Okay. So what's my ordinary share capital? What's my retained earnings? That's 8,240.
8,240. Retained earning.
What's my revaluation reserve?
1,001.
What's the total?
19,340.
Sorry?
19,340.
9340.
Okay. So my non-current liabilities, I know I have my deferred tax, and I have my
8%.
I have
so
bank
how
of
much is my 8% redeemable preference shares from our workings 3, I guess.
Yes. 4,080 naira. 4080.
4,080.
It should go up.
Okay, how about this guy?
Our deferred tax.
How much is our deferred tax from our workings? Yeah, that's my closing deferred tax.
Our closing deferred tax is 1,200.
1,002. Do we have any other item of non-current liabilities apart from these two guys? Apart from deferred tax, do we have bank loan? I'm still wondering, interest on borrowings, did it come from? I know I already put it in finance
The
cost.
finance cost.
part of the
I would have expected that there should be a bank loan somewhere, but
And
maybe
you,
it's activated
you
from the
overdraft.
bank
I thought I was
overdraft.
one overdraft. Where is it? Say?
bank
Yes, it's
overdraft is current liability.
liabilities arising from this overdraft. Okay, that's all non-currents that we have. So what's the addition of this? 5,000 to what?
What we done it?
Exactly.
280.
280.
Give me the stop.
So my current liabilities,
How much?
I have my trade payables and provisions. We already did the workings for that already. And we got 4,700. Abi?
Yes, sir.
Then I know we have one bank overdraft somewhere.
We got from trial balance.
And how much is it?
That's at 260 or so.
That's 260.
Bank overdraft. 260.
Do you have any other item? What is our current tax? I think it was 2280 or something. Let's go and confirm.
Yes, 280.
It was 2280. Which other item do we have that should go to current liabilities?
Sorry, that amortization.
Okay.
We just be after getting this workings. Do we just leave it blank, or how do we? Is it coming into any of our working at all?
Which one is that?
The amortization.
Which amortization? Which
For
one? Is
the
it?
capital development.
We have treated it already. Are you talking about this 800?
Yes, please.
We already added it to cost of sales. The question told us
Oh,
to
okay.
add it to cost of sales.
Okay. Thank you.
Okay. So let's add this together. How much do we have?
7240.
7.
240.
7240. That's
So
right.
let's add our total equity and liabilities.
Could you please
What's
scroll up?
You add this 19,340 plus
Balance. Very
280.
balance.
It's balanced.
Very, very balance.
Okay, that's 3180. Even if it doesn't balance in the exam, it doesn't
Yeah,
really mean,
believe it though.
it doesn't mean anything at all. It could be casting error. It could be where you are lifting figures. It could be, and those things does not matter at all in reporting at all. Even if this that I've done with you does not balance, I will just say, okay, go and cast it again.